Am I going to repeat myself? Probably. This is how I make a living trading. This is how I make a living as a full-time trader, not a part-time trader. Being a full-time trader makes a huge difference to your psychology. And in the 33 years that I've been trading, there's a few things that I've learned. There's a few things that I've picked up that made a difference to me, that in all likelihood might make a difference to you. For those of you who don't know me, I'm Rob. I've been doing this a long time, since the Stone Age. And for those of you who do know me, I'm still Rob. Let's have some coffee and let's chat about being a full-time trader. Am I going to go to the lines today and show you how to trade on the lines? Am I going to give you a course on how to trade with squiggly lines? Probably not. Not today, anyway. Today's not the day for that. That is not what we're about. I can show you how to trade on the lines. In fact, I can show you a primary school how to trade on the lines, a primary school child, so how to trade on the lines. It's really easy to do that. And if you do it with a demo account, you'll probably win every trade. That's how easy it is. And I've shown you in all of my previous videos, in most of my previous videos on the charts, how you can trade with price action. And that's what we use to choose our trades. You and I both know that. We know how it works, and we know what the edge is. But the edge is not in the lines. The edge is always in your business plan. The edge is always in your strategy. But can you make money as a full-time trader? And this is where the difficult part comes in. Just before we go there, understand that trading is extremely risky. 60 to 80% of traders do lose money if they're trading on positions or swing trading or 4-hour daily charts. And day traders who trade on the 5-minute charts and the 1-minute charts, 99% of traders lose money there. And don't just relate that to retail traders, because do you know that retail traders make up this much of the market? It's a tiny percentage of the market. No, I'm talking about real pros who struggle to trade on those minuscule time frames. So if you are able to trade on those time frames and you feel very confident about it and you feel like you've got the psychology for it and you're really good at it, just keep in mind that that could change at any moment, turn against you at any moment. I had a lovely comment from a chap just this week. It said, every time I put my stop loss in, the price would come down and it would take out my stop loss and it would go the other way again. And I got so frustrated with it that I stopped taking stop loss. And then he mentioned that suddenly 3 or 4 months down the line, because he stopped taking the stop loss, his account is now $40,000 down, it's losing money. And had he taken the stop losses like his original plan was, he would only have been a couple of grand down. But instead, we're now 40,000 in the hole and we're struggling to get out of it. Told me he loves my strategy, loves the videos, and is going to get back into his strategy. Lovely comment, love you for it, because you've had the aha moment. But you've also paid the school fees. You've paid the taxes. This is where it comes in. You get into trading, you make these mistakes, you pay the school fees, but you don't forget that you paid those school fees. You remember that. The aha moment comes to you when you realize that when things go pear-shaped in the world, when things start to go insanely wrong, your account suddenly starts to get hurt. It suddenly starts to take extreme knocks. It's because the world is moving in a different way. It's moving rapidly. This is going to hurt your account every single time. You see, if somebody stands up and says, we're going to put tariffs in place, and then everybody gets excited and all the economists think that the world's going to end and the market goes down for a second, and then 15 minutes later that person changes their mind and says, oh, everything's fine, and it all goes back up again. That can hurt you with revenge trading. Or if there's geopolitics in the world like there's been dust all over the place, that can moggy things up and you don't know which way to trade. So that's what the charts are for. You use the charts so that you can see which way the market is going to go, in your opinion. You trade what you see. And it gives you a line in the sand, and it gives you something to trade with. You can manage your trade. But can you make money as a full-time trader? And how much money do you need to be a full-time trader? And this is the big question. Because if you follow the business plan and you follow the strategy, and surely by now you guys do know the business plan, but we'll go over it again in a minute. But first, let's talk about this, the full-time trader aspect of it. Because the thing is, if you're trading on a demo account and you're on a course, there's no risk. It becomes insanely easy to take a trade. It becomes insanely easy to leave the trade, to run the trade, because everything is in test mode. In your mind, everything is in test mode. So you're testing it out, you're testing the waters out, and you see the success, and you see how this works out, and you think, well, that's great. These lines and candles are making me money. So that's how I should be trading. So then you take it and you put real money in the market and you start trading with it. And while that affects your psyche and it makes you sweat and you start worrying about every dollar that's going missing or losing or whatever the case, you still have your job or your business or whatever the case on the side that's giving you that support and giving you that income. So you're not relying solely on this trading thing to make you the money. Firstly, you can obviously take trades with a much lesser amount that are not going to affect your account in any big way. You can watch how much you're risking. And if you only make a couple of $100, no big deal, but you feel good because you won. Because is it all about money, or are you having fun trading? This is where it becomes different. When you turn around and say, well, I'm getting so good at this, perhaps I should give up my job and perhaps I should just go full-time trading. Because then I can relax at home, can enjoy life, I can take a few trades, go down the beach, whatever the case. So before you go full-time, ask yourself a few questions. Question 1, am I going to be able to pay the bills at the end of the month if I go full-time? Because while you looked forward to the end of the month when you maybe had a job, you were getting a salary, perhaps you even looked forward to the weekends, that changes all around when you are the last buck, when you need to pay the bills at the end of the month rather than get paid. Now, the end of the month comes along, and you need to have been successful. You need to have some money in the bank to pay those bills. So what I would normally say is work your business over a period of a year, how much you might need for the year, and work it around that, because one month's not as good as the other. One day is not as good as the other. You have good days, you have bad days, and you can work around that. Can I make a living as a full-time trader? The big question is this: how much money have you got to invest? Do you have enough money to put in the markets that if you get 25% back for the year, will it be enough to sustain you? Do you have $100,000? Do you have $50,000? Do you have $200,000? Do you have $1 million? I don't know. Are you prepared to risk it? How much of it are you prepared to risk? You know that our strategy, we always say risk 1% per trade. Could be 10 trades, could be 2 trades. You're risking 1% per trade on a $100,000 account. You're only risking $1,000. You can only make a couple of $1,000s on that trade. Is it enough for you? Remember, if you're in certain countries in the world and you're using regulated brokers, they'll also choke you from over-leveraging and playing with too much money. They're also going to watch you on that front and make sure you can't overtrade. So you're not going to make money that way either. And with unregulated brokers, you're kind of taking a chance, taking a big chance. Then there's the funded prop firms. But the funded prop firms, they're great for an in-between moving from a demo to cash. So you can put the funded account in the middle there, or for those that don't have that large sum of money and you want something that you can trade with, it's a necessary evil. They're great. They're in the middle there, and you can take them and you can go and you can trade a $100,000 account and they'll give you a portion of that if you're successful. But if you're unsuccessful, obviously they're going to take the account away. If you want an account like that, I have left a couple of links in the description as well. While you're here, join the members area so you can get the trade of the day every day. But you see, this is what you've got to look at if you want to be a full-time trader. You really have to work out for yourself, how much money do I need every month, every week, every day, every year? And then don't try and make the money every single day. And I equate it to this as well. And I've used this example in other videos as well. But so I don't want to repeat myself, but if you are day trading and you say, I'm only going to trade 2 hours a day and I'm going to come in and I'm going to take my money and I'm going to try and make $200 every single day. And then that's me for the day. That's enough for me. And that gives me $1,000 a week and, whatever, $4,000 a month. But I'm just using that as a figure that somebody might choose, right? So you've chosen $200 for the day. That's me. I'm going to come in, trade for 2 hours, make $200, and I'll be off. Now, that's very presumptuous of you to start with, because you are presuming in your nature that you're going to make that $200 every day. So you are confidently presuming that I'm going to come in and I'm going to make that $200 within that 2 hours. So you're also presuming that you're never going to lose. You're never going to lose. And I'm sorry to tell you this, but you most definitely are, because to become a successful trader, the first thing you've got to learn is that you're going to lose. You're not going to lose some. You're going to lose more than 50% of your trades. You might think I'm crazy when I say that. Insane Rob telling me I'm going to lose more than 50% of my trades. How am I going to make money in the market if I'm losing more than 50% of my trades? Well, that's easy. You're going to follow the strategy. And the strategy is simple, and I'll give it to you in a little while, because that's how you're going to win. You're not going to win with lines. You're always going to lose more than 50% of your trades. It's just how it is. Now, you come in for that 2 hours and you start trading with all great plans of mice and men. You're going to make $200. But instead of making $200, you lose $200 in that 2 hours. Now, the question you have to ask yourself is, well, the 2 hours are up. I'm $200 down, so I need to make $400 now. Do I pack up and go like I said I would? Or do I sit here for 12 hours trying to make it back and make the account worse than when it started? Ask yourself that question. What happens in that scenario? And this is why most traders fall short, is because there's no plan. There's no thought process as to what's going to happen next. You've just said, I am going to come in, I'm going to work for 2 hours and I'll make $200 because that guy told me I'm going to do that, and that's how my life's going to go. And then it doesn't work out. No business plan, no idea what you're going to do next, and it just gets worse and worse and worse, and it sends you down into that doldrum of pain. Because losing is painful. No matter how much you're losing is painful. We all know this. I'll quickly go over the strategy so that you've got the strategy, because a lot of you might not have heard my strategy yet, although I've put it in all, I don't know, how many videos have I got on this channel? Hundreds. Okay. The strategy's probably in all of them, which is why I started the video with, am I going to repeat myself? In all likelihood, yes. Repetitiveness is necessary because so many people don't understand this. So many people still cannot separate the candles and the lines and the systems from business plan and strategy. It's two totally different things. But the strategy is, if I was to flip a coin 10 times, it would land on tails 5 times, it would land on heads 5 times, in all probability. Now, I'm not relating trading to gambling or anything like that. All I'm trying to do is put a point across to you. If I said to you, for every tails, I'm going to give you 2, and for every heads, I'm going to take 1. Every person on the planet would choose tails because the odds would be in your favor. It's just as simple as it gets. And that's how we apply our plan, in a very simple way, and a very simple concept. And that is, I risk 1% of the account on every single trade. Let's say the account's $25,000, so we risk $250 on every single trade. You can risk whatever percentage you want, whatever percentage you feel comfortable with. Just understand that you are going to take losses. My plan with the 1% is, if I lose 10 trades in a row, I lose a total of 10% of my account. That's all. But what I do is I keep the risk the same on every single trade. I do not change it, no matter how comfortable I feel with that type of trade, how good I feel with that kind of trade, or how bad I feel with the trade. I don't change the loss amount. The loss amount needs to remain the same. Because if you change it, you're just mishmashing your trades. You're presuming that you're going to be better at trading the S&P 500 than you are the DAX, for example. So you trade less on the DAX, you trade more on the S&P 500. Guess which one loses? Usually the one you're presumptuous about. So keep the risk the same on every single trade. And you'll say, but how is that even possible? How can I do that? Because the first thing you do before anything else is you work out your risk, not your profit, not where it's going, not how great a trade it is. You first work out your risk. Most important thing. So you look at the chart that you've decided you're going to take the trade on, and you say, I want my stop loss there because in that point, this trade would be invalid and I wouldn't want to own this trade. You don't just take a stop loss, oh, I have a close stop loss, so I'm just going to put a stop loss there, or it just feels good that. No, you put a stop loss in an area where you know on that trade, that's it. It's not going to work for me anymore. Because then I'm going to question you if you move your stop loss, because when you took the trade, you said the trade wouldn't work anymore when you took that stop loss. Now all you do is you work out how many lots, how many pips, whatever the case, back to the cost will make up that $250, that 1%. Now you know the size of your trade. Don't just go one lot, two lots, whatever, buying trades. Don't work your trades on lot sizes or pip sizes. Work your trade size against the loss. You've picked your stop loss area. Now pick the size of your trade back to your cost. Now all you've got to do is make sure that the trade can make you more money back than what it's going to lose. You know it's going to lose 1% if it goes all the way, but you're going to try and curb that as much as possible because you want the losses to be that size or smaller. End of story. Same as you want your profit to be that size or bigger because you want more profit. Now, there's nothing wrong with having a one-to-one profit because when it gets there, you can manage it and you can push it out and you can make more. And if you're making one-to-one, your break-even trader, you're better than 90% of the other traders anyway. But you would like to make more on your wins than you lose on your losses. So there's no point in targeting a $50 win on a $250 risk. That's just stupidity. You want to target a larger amount than the $250, but it needs to be possible. It can't just be oh, we'll just put a 2-to-1 here. It doesn't work like that. If you can make more than what you're risking and the trade looks like that will be a good trade, then that's a good risk to reward trade. That's what you're looking for. You're just looking for a trade that will give you the reward that you want from it. You're not looking to just put rewards in place for the sake of it. And if it does go into profit and it does feel like it's going to turn against you and it does feel like it's not going to work out, there's nothing wrong with taking your profits earlier and taking smaller profits. Same as if it goes into loss and it doesn't look like it's worth waiting for the main stop loss, you can get out early. The smaller the loss, the better. But don't do the old, oh, it's $50 in profit, I must take profit quickly. Profit's a profit, isn't it? No. You're going to do that all the time, and it's going to hurt your trading because you'll have a whole lot of $50 profits and a whole lot of $250 losses, which would put you in a net loss. That doesn't work too well. That normally works against you. Can you make money as a full-time trader? Give yourself a couple of years. Become profitable before you think of giving up your job. Make sure you can make the money. If you're in a situation where you've had no choice and you're out of a job anyway, well, you're going to have to work hard at it. You're going to have to understand that in all likelihood, it's probably going to take you a bit of time to become a profitable trader. And don't expect to double your money every year. That's not going to happen. People tell you in the markets, oh, the money's just going to fall out of the sky and the Lamborghinis are just going to come out and park in your garage. And no, sorry, dude. This is like a normal career, normal business, normal job, whatever the case. You try and make profits with it. You try and make income with it. You've got to work out your business statements, your financial statements. You've got to work out where your profit's coming from and how you're going to make it. If you've worked out that on average you can make 20 or 30 or 40% per annum, wow, if you can make 40% per annum, you're quite good. Then that's great. But don't expect to make it every year. Have a plan in place. Look at it over a couple of years. Look at things happen, things change. What happens if you have a really bad year? What are you going to do next? You've got to put all these things in place. You've got to have a plan B and a plan C and a plan D. I got a t-shirt that says plan B, Stick to plan A. But sometimes plan A goes south and it takes you with it, takes you down the southern road, and off you go. Yes, you can make money as a full-time trader if you know what you're doing and if you work a plan around it and you work out how much you can make. And it's obviously if you've got enough capital to trade with. Because even though you've got leverage trading, you don't turn $1,000 into $1 million. That's a pipe dream, a dream of people that I don't know why they tell you this, because even the pros struggle to get that right. But they're trying to tell you, who's just starting out, that this can happen for you. It's like me telling you, walk into a casino, put everything on red, and you're going to be a millionaire. There's a possibility that could happen, and there's a possibility it might not happen. Get it? That's how it works. If you are here, I always forget to ask. Don't forget. Do give me a subscribe and join the members area. Get a few perks. Guys, don't forget to join me for the live shows Tuesday and Thursday. I want to thank you for watching the video, and I hope it helps you in some way or another. It's not perfect. It's just from me to you. These videos are for entertainment and for your purposes, and hopefully they help you in some way or another. Till the next time, guys, keep your feet on the ground. Reach for the sky. Cheers. Ciao.